Good day, fellow investors. Intel has been a covered stock on this channel for a few years now. We even went in and out there with real and demo money. So let's discuss my current opinion on Intel. And we start by discussing the stock situation. So if we look at Intel, the market cap now is 155 billion. And there was a significant jump over the last 6 months of 47%. Let's see if Intel deserves this big jump, what is this, 50 billion up almost in market capitalization or not. So we have discussed Intel in a few videos. This is very important to understand Intel's current accounting. We'll mention it a little bit later. And when it was cheap a year ago, we also bought for our YouTube portfolio that unfortunately got cancelled by the broker giving it, so I have lost it there. See what I can do with that. But there was a clear strategy. Intel was a buy, I think it was around 27, with being ready to buy another 2 steps until 20, where I said that over a few years we should make good money. That happened sooner on the first buy, so okay, nothing wrong there. Let's now discuss the latest earnings, and there is a typical Wall Street situation there. Let me show you. This is from the transcript, and suddenly Intel has a strong second quarter, exceeded expectation on both the top and bottom line, blah blah blah, everything is great. And this is typically Wall Street because this is now 2023 August, and let me just go a year and a half back. Intel investor meeting, just hired the new CEO that was great with Intel over the years. Great talk, they still talk about this 1 trillion market opportunity. And look at the following chart from 2021. The goal was there to accelerate growth, so 2022 higher and then faster and faster, growing to 10 to 12% per year. This was the plan, to go from 74 billion in revenue to 10% per year. I think I made the calculation of 10-12% of even 120 billion in revenue over the next few years, growing mid-teens, everything growing, steadily growth over the next few years, even data and everything growth mid to high single digits, and just great story for Intel, and they even named themselves the next great growth story. Plus, alongside the growth, the gross margin was supposed to stay stable, improve a little bit in 2023 and now, and then simply shoot up for extreme profitability by 2025. But as Mike Tyson says, plan is what you make until you get hit in the face, and their plan was to make so much cash flow to allow for all the investments. However, that didn't really happen, and Intel and everyone got hit in the face severely. But as you have seen, Wall Street, great quarter, we did a great job. That's Wall Street, and that's something that we as investors, analysts have to be very, very careful about. As they say on the executive summary, beat on revenue. Beat what on revenue? The 2021 expectations. If I make the calculation, 13 billion, 30 billion by 4, in my maths is, I don't know, 40, 52 billion will be likely the yearly revenue. Gross margin is 40, they said 52 and going higher. And they made some money, but when they made some money, and they will likely make some money here, you have to watch this video, I'll put it also in the link in the description below, where they changed the depreciation method to gain 5 billion in the accounting standards, which is, for me, not illegal fraud, but legally defrauding investors that believed in them and finding new investors. And over the last 6 months, they have found a lot of new investors that believe in the story, plus Nvidia jumped and the semiconductor industry jumped alongside. But this is, let's say, what you need to know when it comes to Intel. And what is the risk and reward now? Well, with Nvidia jumping 300%, Intel got a tailwind there, but for me something very important and something that is hugely increasing the risk. So over the last 6 months, they have pushed long-term debt up almost 10 billion, which means, yes, their cash flows are not working according to plan, so they are getting into debt, but huge piles of debt at higher interest rates increase the risk of investing in something. This was once Intel with the debt at 1 times free cash flow per year. Now that there is no free cash flow, they are all betting that they will do great in the future, again promising, which makes it riskier and riskier to invest in Intel. And of course, if it would go back to the mid-20s, I think that again a strategy could work well, but now at these levels I don't really see it as good as it was in the 20s. Plus the business model, they are really betting that they will win and they will make a lot of money with their Foundry 2.0 strategy, growth stories and everything. So they might, but for how long? The semiconductor industry is extremely competitive. We see it with the new players coming from nothing, AMD, Nvidia, taking Intel's side. Maybe there will be someone else, maybe not, but too many maybes to make this a long-term hold for people investing into it. Of course, there was the dividend cut, so a lot of selling pressure. We did buy the first round there. I don't know if I sold in my YouTube portfolio. Can't see that anymore. I'll have to go back to the videos. We'll see about that. Can't make any promises now. But anyway, now looking at Intel, somewhere at mid-low, mid-risk, mid-reward situation where the higher it goes, the more it is a bet on promises instead of a value investment. As we discussed yesterday with Berkshire, we are value investors here, so not really chasing that growth and promises. Give me value, give me security. That is what we are here for. Thanks for watching. Check what I do, and I'll see you in the next video.